Good morning, traders. Manny Cabrera here, co-founder of MDC Trading Academy, with today's pre-market forecast for Wednesday, April the 29th. As we move towards the end of the week, let's take a look at the markets today. First, news on the docket for today, very important. We just had the advanced GDP. We're expecting a contraction of 4%. It came in at negative 4.8, which is not bad, only 0.8% off, but they were expecting, and many of the economists and analysts from the major brokerage firms were expecting this to be 10 to 15. That may be maybe for the second quarter. Now, this is just the advanced GDP. There's probably some sort of revision somewhere along the line, but right now the market is really taking this as good news, simply because the market has already discounted a lot of this stuff. And as you can look at the market and you look at this GDP, the market should be heading in the wrong other direction, and it's not. Simply because, like I said, the market has already discounted a lot of this stuff. Here we find ourselves in an update. Volume has resoundingly reduced itself. I mean, we're at 1.6 average, which is great, but we got spoiled with the 2, 3, 4, 5 million that we were looking at before. We have a very healthy average true range here at 111. But as you notice, here's our flag. Market breaks through the flag, leaves the 50 behind. Next level of resistance is going to be here, this combination of the 200 and the 80 SMA. And of course, any break above this and that holds pretty much bodes well for the end of the bear market. That's just the way it is interpreted here in Wall Street. Now, we're going to have a lot of resistance here. We're going to have a lot of resistance, and we're going to do a lot of dancing around this area, maybe some consolidation, maybe some steeper retracements. So get ready for that activity. It's in reference to today's trading activity. Let's look at our analysis, the rest of our analysis charts here. Here's a good time frame here that can keep you always in line. One of the trades that I'm looking for that's helping me a lot. I can see a very clear contraction here in prices. I think this is an 8,000 tick chart. Yeah, we have a clear contraction in this area here. You see that clear contraction? Market was holding the area. GDP news kind of boosted the market to the upside, so that's where we find ourselves right now. So the activity today is probably more than likely all going to happen right within these areas right in here, right between these areas here, potential retracements back to here, and continuations, and or just new spikes and maybe more continuation down. That's pretty much where we're going to find ourselves this day. Let's look at our trade chart so we can get a more immediate look at what's going on in the markets. And as we can see here, there you see we had a slight compression here, a down trending compression triangle, but the market, through the exuberance of the news, breaks clearly through the intraday high of yesterday, could not hold, and now it finds itself here consolidated. So this is our north-south line here. As long as the market remains above this trend line here, we're expecting continuation to the upside. Any break below this, we're expecting movement down. Now, obviously, volume has dried up significantly. The activity of yesterday was quite less than it has been on the average, obviously with the less volume. But again, don't fall in love with either side. Wait for the trends, wait for the runs, be patient. Market is moving a little slower than we're used to it, so just take your time. Do not force this market and watch these deeper retracements. Once again, take care and have a great session.